Let's get more on this now with Jameel Ahmad, Chief Analyst at online brokerage GTC. Welcome back to the programme, Jameel. Now, oil has suffered its sharpest loss since June. Is that simply a result of risk premium evaporating?
I would say so, that the near-term market moves we see in the oil markets are essentially how I would say investors price in the risk premiums rather than actually the physical supply that's come into the market. And the jack-in-the-box moment, I would say, when it comes to the geopolitical situation, is that we all know how sensitive the region is to oil price movements, or how oil price movements will always be so sensitive to how many major exporters of the commodity we have in the region. And at the same time, when it comes to that particular country, we all know that the Strait of Hormuz it equates to as much as 15 to 20% of the oil supply in terms of actually being exported into the market. So we still take every day as it comes. At the same time, the longer term, if we take that potential geopolitical situation away, we all know that there's still a tremendous oversupply in the market that continues to keep prices lower for longer. And I think that's still going to be the mentality that investors are going to take unless we do actually have a geopolitical spillover. And as well as this, we have a global economy that's supposedly going to weaken in momentum in 2026, more than the data already showed in 2025. That suggests we're going to have less demand for oil anyway. And I think investors, again, also are very much mindful that the Trump administration, particularly the president himself, is very much expecting oil prices and wanting oil prices to remain lower. And that's why investors, yes, they still buy into some headlines because the region will always be sensitive to oil price movements. But the actual fundamentals, as well as a lot of the mindset, is that oil prices actually are still going to remain low.
Right, and markets were pricing in the risk to more than 3 million barrels a day from Iran. Was that ever a realistic threat?
Difficult one to answer, to be honest with you, because you never say never when it comes to the region. You also never say never when it comes to the global economic and financial market environment in terms of potential geopolitical crises. Should something kick off, then yes, of course, we could see a huge oil price movements. But at the same time, that's hypothetical. What we can also maybe link it to a little bit is that we all saw how oil prices exploded when the Eastern European situation happened around 3 years ago between Russia and Ukraine. So yes, we do have some precedent to show how sensitive oil prices can be, but we can't really price in too many hypotheticals because the fundamentals, of course, are very much in play.
Now, looking at metals, we've seen silver performing better than its peers. Why is that particularly?
It's definitely the flavor of the month. You're correct to point that out. I would also say that when it comes to silver, it did, of course, now it's doing tremendously well and it's at its all-time highs. But then when you consider global assets as a whole, whether we're talking about world markets, Wall Street, gold, and then other assets too, it did lag behind its peers because all of those assets I just mentioned also hit milestone record highs, a number of all-time highs throughout 2025. And I think silver essentially ended up backing off that momentum. But there's still, again, fundamentals are there to suggest that silver rally is not over. I would also, though, you need to point out and be balanced that it's tremendously an overcrowded trade. And should one institution change its mind on the momentum, then we will have profit taken. And at times this week, we have seen some sudden falls. But at the end of the day, the buyers are in control at this moment.
Jameel Ahmad, Chief Analyst at GTC, thank you very much as always.